I work part-time as a health coach in a medical clinic. What I love about that is that it's supporting people to make ongoing lifestyle changes to help them with their long-term conditions. Working with people who have issues with mobility, trying to get them strong enough and exercising regularly, pain, chronic pain. I would like to get into something that's going to be able to share that information with a lot of people, but also it's that coaching side of it. The empathetic side, putting it into action. We've got an investment property down in Christchurch now, and we've also got one, since then we bought another one in Gleneden in Auckland. Started investing online, fractional shares. So that was kind of my first kind of experience in that world, and so I was very careful with it, and just, ETFs, S&P 500 kind of stuff. That sounds very quick and precise, but it's been a really long process and it hasn't always gone smoothly.
It's really interesting how many companies you look into change brand.
Oh, really?
From the early days, like Tinder, TransferWise, basically any company you think of. Like Monzo in the UK, which is a big fintech bank, was like Mondo or something.
Yeah.
There are tons. It's incredible. Didn't realise how many early stage startups, like Airbnb wasn't Airbnb to begin with, etc. So the Facebook, there's at least a slight evolution of most brands from when they start to when they get product market fit and actually become a real thing. Mm-hmm. And I'm very happy that we've done it now.
Yeah.
And obviously you've been a big part of that, so thank you.
Oh, you're welcome.
You were saying that you've learned a lot from this whole process.
I have.
Was there any guest in particular that you were really kind of blown away by?
Darcy.
Darcy.
Yeah, because I think he's quite, like he says in his podcast, he's outside of that box. But I think it's kind of like a culmination of a lot of different thoughts. So what it's done is it's opened up my eyes a lot, I think, to what's out there and different ways of thinking. I've been thinking things that I never would have thought I would have thought about, the potential of, hey, why can't you start your own business, and what could that look like, and what are your strengths, and that kind of thing.
So from starting the podcast, 19 recordings in, would you say you are thinking more about how you could start your own business?
Yeah, and
that's cool.
20 weeks ago, I would have been like, nah, too hard. Don't have the knowledge, don't have anything like that. And at least I'm thinking, well, what if? I'm much more curious about it.
What would it look like?
Yeah. So it's quite a dramatic change of my mindset for me, because I'm not particularly entrepreneurial or brought up in a family that is, or been exposed to a lot of that. Like I said, I think when we first met, quite risk adverse family. So anything that is putting yourself out there, whether it's financially or, personally or anything like that, I'm kind of just...
Well, yeah, the podcast helps with that.
Yeah. Pushing the boundaries.
Yes. So we often ask guests about their aha moment. So when was the most recent aha moment? And then I guess, were there any years ago that you had that really kind of got you starting to think about long-term wealth building?
So my most recent aha moment was probably in the middle of COVID. We were lucky in that my husband was really secure in his job. He was working from home. I was obviously at home. We had 3 quite young children at that point, so it was a wee bit hectic and stressful. But like I say, we were still doing okay. But Harry had a moment, and he'd been talking to me for years. We've been together for 20 years now, for years about, hey, how are we going to set ourselves up for the future? What could that look like? Property, investing. And I was always kind of too scary, too hard. I know nothing about it. Okay, you can do that, right?
Abrogate responsibility.
Yes.
Nice.
Yeah, not my proudest moment now. So he had a moment in the middle of lockdown where he was working his backside off. He was, working really hard. I was doing the kids. We were both possibly not in the best headspace. But he had a moment where he was like, I just need some help. I need you to get on board for this. I need you to make decisions now and be engaged now in what we're going to do for our future. And I was like, because he was quite desolate about it. And I was like, oh my God, I've done this to him. This is me. This is, like, do you know what I mean? And I was just like, oh, basically, oh shit, I can't keep doing what I'm doing. That's not fair on him, right? So I had that moment. And then I hadn't really been into podcasts or anything like that. As part of my mental health during lockdown, I'd been like, for half an hour, I would go for a walk each day. He would be responsible for the kids for that half hour, just so I could get out and have some alone time. I started listening to podcasts, started listening to Girls That Invest. It was still quite a new thing back then. I learned so much. Brought the book, did their masterclass, that kind of thing. Also started listening to the Property Academy by OPS. Similar stuff. And it was very much opening my eyes to things. So that was, and so Harish was very much the way that inclined anyway. So it was finally me taking some responsibility for our future and what we were going to do. And you know, I'd always said, you know, we're a partnership, but in that instance, I was completely tapping out. So we are a partnership now, from that point of view as well. So
it's one of those things that also is quite a slow burning thing. But naturally, as humans, we want instant results. And I think that his frustration was probably that, well, for most of us, we just want to know that the future could be better. And it's not necessarily guaranteed. Nothing's guaranteed. But it's like, that knowing that there's a roadmap to a fruitful future is such an important thing, because then you're at least rowing in the right direction.
That's it. You're setting ourselves up. That's what we're trying to do. And our kids, and like, it always comes up when we ask, how would you define wealth? For us, it's that ability, the freedom, being able to make the choices that we want to make at that time, and having the time to do it.
And you talked about your kids, so is it about just being able to provide the framework for them to be successful, or is it also with some sort of succession event in mind? Or
I think it's setting them up to be successful. So not necessarily leaving them with lots.
So more like making sure that they can have the extracurricular activities, the kind of...
But also that exposure to that kind of thinking, right? Educate them that way is really important. So that then,
they're willing to take risk.
And, they can set themselves up. So they've had a good base, as much as we, can give that to them. And then, go forth and create your own life.
I think we always talk about, it's about taking risk, right? But it's actually what you also said. It was actually just like to put yourself out there. Because we think about risk, and I think risk is often misunderstood. Like, people think about risk in very basic terms that they've probably just heard someone else talk about and then they repeat. Which is often the case. Is like, especially with social media and short content, is that you can get a very defined snippet of a view that sounds good, but may not have the kind of conviction, I guess, behind it. We get trapped into views strongly held that we may not have basically researched enough or really have a strong enough understanding of from a first principles perspective. So when you think about investments, we always think about investments in the investment industry as like, conservative balance of growth. Well, that's really not the right way to think about it, because, something conservative over the last couple of years, quote unquote conservative, could have been like, a lot of bonds, and bonds have been the worst performer from an equity preservation perspective in a long time. You've never seen this sort of event from interest rate hikes in kind of a very long time. And obviously it was coming from a historical low. That's 60-40 kind of conservative. Well, that's not really even considered that conservative, but bond heavy portfolios that would be considered like not so risky were actually 2021, 2022 the most risky thing to be in. But people don't really necessarily understand that, because they get three options.
It's an education piece, right? I feel.
So risk, I like the idea of putting yourself out there as an alternative way of saying risk, because risk also has negative connotations.
Totally does.
It's like, and the, again, a misguided idea about like, I've taken a lot of risk, therefore I'm going to get a better reward, potentially.
That it's going to be successful.
Risk is just such a complex thing, but it's actually, I think, really kind of not well understood. I think if one thing we can do on this pod, it would be cool, I think, would be demystifying what risk is.
Yeah.
And I just really like that, putting yourself out there, because that's what it is, like risk, but putting yourself out there is like, hey, here's a piece of me out into the world, and like people are going to judge it.
Yeah.
Right. But I think that's cool. And when you go ahead and say, oh well, I'm going to buy an investment property, you're definitely putting yourself out there, because you're leveraging yourself.
Yeah.
And then the same with startups or starting your own business. All of these things are kind of putting yourself out there to be potentially wrong.
Yes.
And humans hate being wrong.
Yeah.
And the one thing that's worse than being wrong is everyone knowing that you were wrong.
Yes. Yes.
Right.
Yeah, public failure, right?
Yes.
Yeah.
Not great, not ideal. That's kind of cool. So since COVID then, what have been the primary steps you've taken with the kids and then as a partnership?
Yep. So we had luckily bought our house back in about 2010. So at the time we thought it was a lot of money, but not actually. So we built up a lot of equity in that, and so we used that to buy our first investment property through OPES. They did a really good job of supporting us through that. So we've got an investment property down in Christchurch now, and we've also got one since then. We've bought another one in Gleneden in Auckland. Started investing through an online, investing company, fractional shares. So that was kind of my first kind of experience in that world, and so I was very careful with it, and just ETFs, S&P 500 kind of stuff. But then also we invested some money in a gin company, which was something Harish was like, let's do this, and I was like, okay.
Was that like a crowdfunding situation? Or?
Yeah, a little bit, yeah. So that was, but the funny thing with that is, I had worked at Lion for about a year between having two of my kids, and one of the reasons I didn't go back was because I had this very slow epiphany around, actually, I don't want to be helping people sell alcohol. And then we invested in this gin company, and I was like, what are we doing? But yeah, so I think that was a lesson learned. So now we only invest in values aligned things.
Okay. So if you were given the opportunity again today, irrespective of the success,
I wouldn't do it.
Potential success, you wouldn't, just because you don't really want to be enabling people poisoning themselves as a hobby.
I come from a family that has a fair few alcoholics in it.
Oh yeah.
And I also have had struggles with it myself in the past.
Okay.
So yeah, it just doesn't align with my values now. But yes, and then obviously we also invested some money in Acuity.
Yes.
Which was much more values aligned.
Good. That's the dream.
So yeah, that sounds very quick and precise, but it's been a really long process, and it hasn't always gone smoothly. One of the things we've tried to do with our kids is be really open about what we've been doing. It's not a secret. They're not old, so the oldest is 10, so 10, 8 and nearly 6, so age-appropriate information, definitely. But they came with us when we went to check the property out when we were down in Christchurch. They've driven past the place in Gleneden with us, that kind of thing, so they know that they're there. They know that we are topping up the mortgage on those now at the moment. They know we talk about our investments. The running kind of joke in the household is so he puts aside money for the kids every month and invests that. Harry looks after that, and I look after his and mine investments, and I'm currently making 40% off it, and he's I think on about 8% or something like that. So
you need to give him some lessons.
Yeah. But yeah, so it's been a short process, I suppose. Only 3 years, I suppose, about now.
So you've managed to that was the investment properties too.
Yeah. So
just in the last 3 years.
Yeah, but we were lucky that we bought when we bought. Our first house, our house, because that gave us the equity to be able to do that. But if I hadn't, been educated around leveraging and all that kind of thing, there's no way we would have, even thought about doing it. So I can't talk highly enough about learning about financial literacy. I've got young people in our extended family, and I'm like, go and do a course on basic stuff, learn about credit cards and interest and just the basics, right? Because so many of us don't know anything about it, and we can live our lives, and you get to 65 or whatever, and you couldn't explain to someone how the interest on your mortgage works or anything like that. And there are people out there like that, or how a credit card works, or how Afterpay can maybe not work to your vested interest.
Right.
So I think that's hugely
I had an
important.
employee once that he was like a walking, talking subscription. Like, you just knew that most of his paycheck was going into buy now, pay later.
Yeah.
Like, he was just. It was interesting. I used to think, like, when I was walking around the streets, I used to like imagine like the kind of numbers above people's heads with their subscription for their lifestyle.
Yes.
It's probably a bit silly, but yeah, I'd kind of do that because it's often things that seemingly seem like not a big deal that then compound into being like kind of relatively significant or majorly significant.
Yeah.
And then trying to model out how interest rates affect us, I think, is something that we don't do well as a society. But in New Zealand, obviously, there's just been so much success garnered from leverage that it's so natural, and it's such a rite of passage almost. Like, the more that something becomes kind of the norm, the less you have to think about it.
Yeah.
Typically, and I guess it's going to be really interesting to see now how people go about dealing with these things, and it will probably return to a long-term norm rather than a short-term norm that we all thought was going to last for a very long time.
Yeah.
But yeah, I think learning about credit cards is something that would be kind of interesting. And how do you do that? How do you just go and learn about credit cards?
Well, there's there's so many courses out there now, right? So you can go and sign up. There's some great ones. Francis Cook, Multi-Millionaire. Keeping the change. They've got one. You can learn about investing from Girls That Invest. There are lots of courses out there. This is such an auntie moment, but like 21st birthday presents, I'm like, well, maybe I pay for them to go and do one of these courses, right?
That's a really good idea.
Like, as an auntie, I'm like, that's cool, right? As a 21-year-old, I'm not so sure if they would agree with that.
You could couple it with something else.
Yeah.
Like, like the course plus something that's the cool
part. That's cool, yeah.
But then the knowledge that's, that comes with it, that comes with like understanding something, like from a first principles perspective, is quite nice. And I think that like access for everything in life just keeps getting easier. Access to trade equities, access to trade other financial products is becoming more and more accessible, and rightfully so. Like, I think that is the right trend. Like, why should high net worths get an experience and access to product that is so different to everyday people? Like, that's something that I'm extremely passionate about. But as access becomes more readily available, our ability to kind of consume blindly then starts to kick in. Think Uber Eats, think about just we don't have it here, but Amazon Prime in the UK and the US is the thing that's heavily used. And it's like, I think that now with all the access available, everyone's been given a fishing rod, but I think the thing that's missing is like, hey, how do you fish? Especially when it comes to building wealth.
Totally.
And that's choosing what financial product you're using, even if it's insurance, credit cards and debt, ETFs, managed funds, equities, all of that stuff. It's like, how do you gain as much knowledge as possible with the caveat of it not being noisy?
Or scary.
Because there is so much information you can get now as well. With those courses and such. You could do all the courses.
Well, I think that's it, right? Educate yourself, but then at some point you've got to take action, right? And
lived experience is pretty helpful.
It is.
Versus theoretical.
And surrounding yourself with people who are have that same kind of thought is important too, I think.
The same and different, which is nice as well. Like, especially in trading. Like, when I think about our strategy, and we've had a guy with us for quite some time now, and we have relatively aligned views. We're both very pessimistic, I think, by nature, and question things. And I often think, I should get someone on top of what we should add to the team, someone that's a bit more kind of optimistic, perhaps.
Balance it a bit more.
To balance our kind of skepticism.
Yeah.
I think that would be really, really interesting to do, because you do need a devil's advocate, both ends. Because if you're relatively someone that question things a lot, you need to understand why everyone's really kind of interested or excited by something from an authentic kind of view, rather than just trying to put yourself in the shoe of that narrative. Okay, that's cool. Courses,
Yes.
and lived experience. Because I often think a lot of the economists out there are economists. I often think that someone that is actually allocating capital is probably going to be someone I would personally prefer to listen to, rather than an economist that's relatively theoretical.
Yep.
Because there's a little bit of a difference from when you've got something on the line to understand something.
Yeah.
Then again, being an economist is extremely difficult, because it's something that it's so unpredictable.
Well, it's there's definitely a science behind it, but it's also a little bit of an art.
Yeah.
I
Well,
imagine.
there's the science, and there's like how things should work, and then there's the idiosyncratic kind of nature of the kind of world that then makes it so that maybe the thing that should be the case is not necessarily the case this time.
Yes.
That's often always the way. So if you were to start a business, because now you were mentioning that you were thinking about that now quite heavily, not necessarily to action this second,
Yes.
but what industry would it be in?
It would be something I know. So I work part-time as a health coach in a medical clinic. What I love about that is that it's supporting people to make ongoing lifestyle changes to help them with their long-term conditions, whether it's diabetes or cholesterol or, I'm working with people who have issues with mobility, trying to get them strong enough and exercising regularly. Chronic pain, there's a lot of people out there with chronic pain. I would like to get into something that's going to be able to share that information with a lot of people, but also it's that coaching side of it that is going to make all the difference. The empathetic side, but it's also putting it into action, supporting people to make those and they can be just really small changes that add up over time, to have different health outcomes as to what they might have had if nothing changed. Being able to help like that would be phenomenal, and it would have a long-term flow-on effect in terms of our healthcare and all of that kind of thing as well. So I think it's access to information, but then it's the coaching.
How do you get someone to do it? Yeah, because like those apps, that you get with your physio and stuff. Like I'm notorious for just not doing the app. I'm just like,
it's an accountability thing. I find a lot of people utilise.
And that's what they said when I was going through the.
And it's also, you've got to meet people where they're at. So if you're working with someone who wants to make some changes in what they're eating, and they want to start off with by drinking 1 cup of water a day as opposed to not drinking any water at all, awesome, let's do that. When they're on top of that, they get to choose what change they make next. So it's not me telling people what they should do. It's sharing the latest information and going, what's going to work with your lifestyle? What's realistic and achievable for you? How are you going to put that into action? And then kind of creating a plan. Well, they create the plan, you draw it out of them, so that they've got some skin in the game for themselves. So it's basically giving people the power back. It sounds really naff.
Yeah.
But yeah.
How do you engender like people not feeling really like a lot of shame around not doing the changes, and then kind of wanting to kind of seem like they've made those changes?
So I try really hard to set those that up front. So when I first meet someone, I let them know that, look, hey, life happens sometimes, right? It doesn't always go to plan. Your action plan, the one that we've worked on, it may not happen, and that's okay. You've got to give yourself grace so we're aiming, I think, for better, not perfect.
Yeah.
And no one's perfect. And I have some people who come to see me and they're like, I'm going to do this, and this. And I'm like, that's awesome. Let's just do it one small thing at a time, though. Otherwise, you're setting yourself up. But I try really hard. If this plan doesn't work, that's okay. We will try something else. And you know, I don't say it like this, but they're not letting me down. You're not letting yourself down. We'll just try. It's just that way didn't work for you. Okay, we've learned something. It's trial and error, right?
Yes. And then I guess getting to habits.
Yeah, it's habit building.
Basically,
that's a huge part of it. Yeah.
Trying to get to a habit that exists and continues to live on beyond the initial
Beyond me,
advice
yeah.
and beyond the sessions with you. Oh, that's cool. So you think so it'd be kind of basically what you do today, but potentially, I mean, it could be. You could start a gin. You wouldn't start a gin company. You start maybe a non-alcoholic gin company.
There's already all of that's already
that's
around. Yeah,
okay.
That's a thing. But no, I like the idea of being able to help people. What that would look like, I'm not so sure. But I mean, you know, just earlier we interviewed Sarah. I think it's important that whatever you start a business in, you're passionate about, or you have a lot of interest in it, because you're going to spend a lot of time doing it. So there's, you know.
And that's an interesting case that I thought we needed to get Sarah on the podcast because I knew her story.
Yeah.
And to me, it seemed like, and I actually don't know where they were, how they were situated when she started, but it kind of seemed like, well, she did start the business. She didn't start the business in her early 20s.
No.
Like, she'd lived and done some really interesting, empathetic driven jobs, like the midwifery and such.
Yeah.
And the sales where, I mean, it just translates really well to sales is obviously empathy.
Yeah, totally.
And coaching, the same
Yeah.
thing. It's about empathy.
Yeah.
And actually a lot of like stuff like financial advisors and stuff, you know, what they tell me often is it's about keeping people on the boat rather than anything else.
Yeah.
Like they're just keeping people kind of feeling positive or feeling like there's a better future.
Yep.
So that definitely probably applies to coaches as well, like life coaches.
One of the things that I thought was cool about our podcast is that you don't need to be a certain age to start. Do you know what I mean? So like, you know, I'm 42. I didn't kind of start on my wealth journey until I was probably, would have been 38, if I'm honest, in terms of me
Thinking
and
about
Harish
it.
actually going, right, I'm on board.
Finding a roadmap.
Yeah,
Getting a roadmap.
let's educate ourselves. This is what we're going to do. Whereas, you know, there's no age. There is no age limit to any of this. If you get to 65 and you're like, hey, I want to start a business, go for it. Don't let how old you are stop you. And that works in reverse as well. If you're 18 and you're like, actually, I've got this awesome idea.
Yeah, I think there's some natural benefits to starting younger, obviously. And people should feel like they should put themselves out there more when they're younger because they have more shots at goal.
Yes.
But like you say, like I know lots of examples of people that have actually started relatively late and just done had crazy outcomes. There's like the most famous who recently died, quant investor in the world, and he'd worked for a bunch of different kind of bureaucratic agencies in the US doing like code cracking and different stuff like that. He was a mathematician, Jim Simons. He did a bunch of work in mathematics, and then he eventually got into and worked at universities and built teams in universities around mathematical departments.
Yeah.
And then he built this hedge fund. And the hedge fund, it took about 11 years for them to really
It's a long time.
crack the code.
Yeah.
I mean, they would have still had okay returns, but I imagine they were just kind of run of the mill. I've read the book and followed the story, but once they kind of essentially implemented systems and automation and machine learning into their strategies and implemented, like Sarah kind of was talking about some of the more kind of boring technical stuff.
Yeah.
They negotiated some kind of technical advantages with exchanges to allow them to trade more effectively than other funds. They had basically a direct connection to clearing houses, which is just it's an inherent advantage. But they have, and he's just passed away, but today they have 300 PhDs working in this random place, often not from finance.
Oh, really?
Yeah, the whole story, it's the man who beat the market. Well, no, the man who solved the market, I can't remember. You Google both of those, you might find it. It was a book about Jim Simons. So, yeah, and it was really interesting to see. And he didn't really become wealthy until his late 50s, 60, but then he's in like the top 50 people, like wealthiest people in the world.
Yeah.
And they have like the best returns than any other hedge fund, but they had a cap. So his story is, you know, that they weren't able to do what they've done with more than like $6 billion.
Okay.
So they have the best returns, but they wouldn't be able to do it with an unlimited amount of money. And that kind of talks to like things being kind of relative and like situational.
Yep.
And you can actually notice that people can turn it around in a real short time, like at a late age.
Yep. That's what I'm hoping for.
But I don't think 40 is.
Oh, no.
38 is late. I mean, I didn't start thinking about that sort of stuff like early.
Yep.
But I've always been keen to put myself out there, like and fail or be in a position where I could fail. That came from competitive gaming for me, and sports, I guess. Sports is really good for that, actually, isn't it?
Yeah, well,
Like-
we've got, so I grew up dancing, and so
Yeah.
that's competitive. But yeah, the kids are all involved in something like that to get those experiences as well.
Yeah, the emotions of losing.
Yes.
Yeah, it's really quite interesting. I've done some refereeing some jiu-jitsu competitions.
Yeah.
And the kids, the loser will cry every time.
Oh, really?
Every single
Oh,
time.
gosh.
The kid cries that loses. But I think it's amazing, you know, like, you know, what you'll learn. Coaches often say, like, and I'd say it, that you learn, you get 6 months of training in a tournament
Yeah.
over the weekend.
Yeah.
It is a complete different mind shift, and it's that compression of anxiety and stress
Yeah.
that takes you to that next level.
Yeah. And I think it's good for kids to go through that.
Yeah, a bit of adversity.
Yeah.
Yeah, it's good. Like when you lose, you cry, and then you might have another match.
Yeah.
So you have to do it all over
Pick
again.
yourself back up, have another go.
It's valuable. Yeah. So now that you, it kind of seems like you guys are completely on the same page now. Were you? Because you said that you weren't thinking about that from a, I guess, building wealth perspective before. But have you guys always been relatively connected, I guess, from a finance perspective?
Yeah, I would say so. In terms of like, I know everything that's going on. Like, I know all the bills. I know our mortgage payments. We've both got visibility over everything. To be fair though, it wasn't until we had children that we had a joint bank account.
Oh yeah.
But we would not pull our money, but it was our money, I suppose.
Mm-hmm.
Harry might laugh when I say that, but I think we were pretty equal for most things. Like, it's definitely a partnership. It's just, I suppose, the things that I had no exposure to or was afraid of. That's when I'd be like, I'll just, you take the lead on this. You know more than me, whether he does or doesn't.
Yeah.
But yeah, now it's much more even.
So if you were to give your younger self, you give your 38-year-old self, like, if you were to rerun it,
Yeah.
you'd be 38 again and have that aha moment, even if it wasn't at 38, it might have been
Yeah.
before, maybe slightly after. What would be, now you know and you've kind of started it yourself, like, what would be the first thing you do, like that first action you take?
I probably wouldn't change it. It would still
It'd be
learn
exactly-
more. Yeah, it's still like go and learn stuff.
Okay, so you're like, that's what you focused on, like,
Yeah.
like,
Go and get a bit more confident about it, so you're not afraid of it. You don't have to know everything. You just need to be
Yeah.
a bit more knowledgeable. Like, so I could go into a room and talk with someone about basic investing quite comfortably now. Whereas before I just would have moved on. Do you know what I mean?
Yeah, that's interesting because when we sold the IP of Uproar to the company in Australia, that's when I really got into investing. I probably spent at least kind of 2 years before I took any action, before we built the long short equity strategy, before we wrote any code, built any algorithms. Spent a couple of years just learning before doing.
Yeah.
That's a good piece of advice. Were there any books or anything that was instrumental?
Yeah, I can't speak highly enough of Girls That Invest. So what they did is they gave the information, they made it really understandable. It was not doom and gloom. It wasn't like, oh, this is just for a certain crowd of people. Anybody, could learn that information in an easy way. The book that they put out is similar. You follow it along and you can start, you read the book and you've got enough information to go and start actually doing something. So yeah, big ups to her.
What was the name of the book?
Girls That Invest.
So it's just the name of the pod?
Core, yeah.
Oh, okay, cool.
And when she first started, it was with Sonia. Now it's with Maya. But yeah.
Host change.
Yeah, host change. But yeah, really, really useful. I also have been listening to Keep the Change.
Yeah, he's cool.
I found him, different point of view, different approach, but interesting.
He's got a bit more abrasive than the Girls That Invest.
Yeah. And I suppose the lady who runs the Māori Millionaire, so I follow her on Instagram, and she's doing some epic stuff, really cool things. So I've been following her, and in terms of investing in property, like I said earlier, I've been going through OPES and the Property Academy. It's worked out well for me. But I think there's so much out there now. Find what's going to work for you. If you can't relate, there's going to be another podcast out there that you're going to find someone you can relate to.
There's no shortage of content.
Nah, it's if you want to access stuff, now is the time. It's never been easier in history before, right? Like I had a patient come in the other day to the clinic, and somehow we ended up talking about, how do you acclimatise if you go to Peru? And we just searched it and used Copilot, and there it is.
Yeah.
I don't have to know anything anymore. You can
I think that's a problem, right?
Yeah.
That's potentially a downfall.
Yes, but it's.
But you have the choice.
You've got the choice whether you actually learn it,
or just.
But I think it's like anything else. You go to somebody and get advice. Okay, I take that advice on board. I listen to it. I take what I want. I leave what I don't want.
And then you can get a completely different piece of advice that may also have some applicable angles for sure. I mean, you see that in law as well. Legal opinions are legal opinions, and they create precedents around legislation, right?
Yeah.
People can interpret things differently.
Exactly.
Awesome. Well, let's record the next one now. We've got a guest about to come in, but it's awesome to kind of have you talk about your story. And what's going on, and I think it's been really interesting to see how many more months it is until you start a business. But I guess the podcast itself is like an opportunity for you to talk about being a health coach in a sense, right? And we've had some people on the podcast that have also talked about health in depth.
Yeah.
So I think hopefully, like you say, it's not necessarily about money as well, right? It's about, can you just put stuff out there?